It's Mortgage Talk with Carrie Ann. I'm back. We're here to educate and talk today all things credit. So as I wait for a few to jump on here, I was going to put a song on, but can't figure that out. Today I'm by myself here, so you got to love figuring out technology here. All by yourself. The millennials are not close today. Hey everyone, welcome. We are talking all things credit today. I get asked the question often, what credit score do you go down to? What's FHA's credit score? Do you allow less than a 620? So I thought today I would start as we kick off at 2022, this whole entire month. I feel like this is the entire month to kind of get organized and get excited about what's to come. This is going to be a really exciting year. And so understanding the mortgage side of the transaction, I thought we would change the narrative and talk more about mortgages. So hopefully more mortgages will be offered in all of those multiple offer situations. Again, all lenders aren't equal, right? You want to find a very confident, trusted mortgage lender that actually knows all things mortgage. And today, this lender here is going to talk all things credit. And so credit scores are really important. We still need one. There's somebody in town that talks about how you don't need one. But when it comes to mortgages, you want a credit score. The higher the credit score, the better the interest rate. And interest rates, you may have heard a rumor, they're on the rise slowly. They're slowly going up. And so with that, again, the higher interest rates possibly mean that qualifications shift for your borrower. So depending upon if you have a first-time home buyer or if you have an investor that is looking for that perfect cash flow scenario, you want to make sure that you get within the category that offers you the best interest rate possible. And if you're not putting 20% down on a conventional loan and or if you're looking at a government loan, you have that mortgage insurance. And so on a conventional loan, again, the higher the credit score, the better the mortgage insurance as well on that. So lenders talk in thresholds of 20, okay? So 580, 600, 620, 640, 660, 680, 700, 720, 740, right? And so as I move into the new threshold, that's going to allow me a lot of incentives, right? And so that's the goal that you and I are looking at. If I pull a credit report on myself today, and let's say it's a 716, right? Well, if I got that credit score over a 720, I would be offered a different interest rate and or lower cost, or my mortgage insurance to be lower. And then intention would drop the monthly mortgage payment, right? So we want to do that at all possible. So remember, credit scores right now can go as low on a government loan. Now keep in mind, remember we talked about all lenders aren't equal, right? And so I'm a direct lender, and that's a huge perk for you when you're looking at a mortgage lender that you want to work with somebody that has true connections with the agencies. I don't have to worry about who is purchasing my loan and what their guidelines are, right? I'm focused just on the agencies. And so I don't have an overlay to a credit score, which is a huge win for you and your potential buyers that are excited for the opportunity to purchase real estate in 2022, okay? So if you are looking at a government loan, an FHA loan, which we know to be a 3.5% down requirement, we are able to have a credit score less than a 580, right? Now remember, if you go less than a 580, you have to put 10% down, right? And so as a direct lender, we have a few options. The system, which is called an automated approval system, that's going to give you and I an approval, or it's going to refer us. And at that point, we are allowed to make sure that we meet the manual guidelines, and we actually have a human, which is an underwriter, to review that, to make sure that we meet the manual guidelines. Now, in regard to mortgages, it's really important that you and I know that we are looking for the ability to repay that mortgage, right? And so even though I have an approval through an automated system, but I have multiple delinquencies on a mortgage, maybe last year or the year before, that may not be the right thing that you and I want to do is give this individual a mortgage. We want to make sure that they're educated, they understand the importance of making their mortgage payment timely, because that is going to help you and I continue to grow. As in, we don't want to see anybody foreclose, right? We don't want to put anybody in a mortgage that's not comfortable and confident with that monthly mortgage payment, right? So it's really important that we do that. We here at My Mortgage Team do things a little bit differently. We don't tell you what you're qualified for. We first ask you what you're comfortable paying monthly. If your budget is $1,500, most likely we want to keep you around $1,500. If it's $2,500, we want to keep you there. If it's $45,000, etc., right? But we don't want to say, great news, the computer system granted you an approval for this price of home up to a $3,000 mortgage payment, and in your mind, you only had the budget for $2,200, right? And so we'll slowly inch you up there for comfortable reasons. But as the interest rates rise a little bit, that mortgage payment could shift, right? And so we want to make sure that everybody's comfortable with everything. So again, FHA, there is not a credit score requirement, but if you are under a 580, it does require 10% down. So the month of December, we helped serve 2 families, 568, 567, right? They both were put the 10% down. They both showed the ability to repay. They were great borrowers for the FHA program. Now let's talk about our veterans. Always honored to serve those who have served. And so again, the VA loan is one that does not have a hard credit score requirement either. And so if it makes sense and they show their ability to repay, then you and I can move forward on that. Now there's some people that have things called overlays, credit score overlays. Their VA loan doesn't go down or goes down as low as a 640 or 620 or 600, right? We don't have that requirement here at My Mortgage Team. So that's a huge win for you as a real estate agent and or as the customer looking to move forward on a new purchase. So it's important to know that. Now again, why are credit scores low on one and not on another? Remember, credit scores are made up of multiple different factors, right? Remember, when you were looking online, if you go to the freecreditreport.com or the Karmas and all those other things that are out there, they're working on something called a Vantage score, right? So a Vantage score is really nice. Mine is beautiful. It looks great, right? But that Vantage score really is just something that you and I put on the wall. Like woo, that's exciting. But that Vantage score doesn't have anything to do with mortgages. You and I are looking at the FICO score, right? And so some people call and say, Carrie-Ann, you dropped my credit score, right? Why is my score low with you and not online, right? Well, I want my score to look as great as it could be as well. But remember, education is key. So Vantage versus FICO, right? FICO versus Vantage. Mortgage lenders are looking at the FICO score. So that could be different. That could be up or down a few points or even multiple points, right? And so there's many different factors that go into building that credit score. If you have minimal credit and you are one that has added yourself to a mom and dad credit card, an authorized user, you could boost your credit score. You could have a 720, but you have one authorized user account, right? And that doesn't really show that you have the ability to repay. So that's one scenario. Another scenario is you have 3 trade lines and you were late on one, right? And so it just dropped your score so much. Let's say you had a situation with COVID. I mean, many people, we all had situations, right, with the COVID pandemic that is still going on today. And so credit scores have shifted up or down depending upon if you were delinquent on one account versus another. Installment debts, mortgage debts, have a lot more pressure than a revolving, right? But if you are looking at going ahead and qualifying for a new mortgage and you were just late just last month, there's a lot of pressure, right, on that credit score. And so your score could drop down. So there's many different factors. Some people say, why do you allow for credit scores so low? Remember, everybody has a story. I have one, you have one. So we want to look at the story. Life in the past may not be the same as today. And so sometimes the credit scores have not picked up for us to be able to shine brightly currently, right? And so sometimes we just have to look at the whole story. Back in the day when I was in operations, we would do something called a credit map, and we would map out everybody's delinquency, right? And you could see exactly where in their life, what time in their life they had a situation when it dipped on their credit score. That's important to look at even for yourself, because you can explain that to an underwriter. Underwriters are human, right? They want to help you in any way that they can if they understand understand your story. So many lenders just stuff loans up there to an underwriter and they get denied, which is okay because they come to me and we most likely step back and we organize and we think through and we share with the underwriter exactly what happened and what caused a credit score to be low for that particular time, right? And so that's important to know. All right, so let's talk about USDA. USDA is a government loan. It has their own credit score, which is a 640, but they allow for exceptions down to a 620. So that's a huge win as well. So people come to me and say they want a USDA loan and they have a 638 score. They get denied down the street. They come to us. We work on some strategies to boost their credit score really fast, and we are moving in a forward direction with looking at that USDA loan. Shinoa, that's a new 100% loan that a lot of people are liking, and it's popular right now. Again, a 620 credit score is allowed for that particular program. What about THDA? THDA is our first-time home buyer program with the state, and we love our friends over at THDA. We serve so many first-time home buyers with their product. Again, 6% to help cover down payment and closing costs, and right now they are the lowest interest rate on the block. So you want to take advantage, and those first-time home buyers want to take advantage of that. And if you're a veteran of first-time home buyer, you're still taking advantage of a 2.25% interest rate through THDA, which is a huge benefit to all of those veterans that are first-time home buyers. But you need a 640 credit score. That's really important, a 640 credit score. All right, so now our conventional borrowers out there. It used to be a 620 for Fannie and Freddie. Freddie went to a 600 and Fannie went to a 620. Now, they also allow averaging, which is something new and really creative. They allow for averaging. So that borrower that once qualified for just FHA, but has so much money to put down, right? And they don't want that mortgage insurance, they now can look at an average of those credit scores, which will allow them to move more in the direction of a conventional loan to get around that mortgage insurance, right? So those are exciting things to know. Now, remember what we talked about at the beginning. The higher the credit score, the better the interest rate. So we're talking about low credit scores right now. So remember, your interest rate, don't be surprised if it's a little higher, but we want to back into purchasing real estate because gaining wealth through real estate is key, right? The rents right now are inching up as much as the values of homes are inching up, right? And so for us to be able to get you into a mortgage that you're comfortable and confident with paying every month, even though your interest rate is just a little bit higher, because you do have that tax interest deduction, up I think till $700,000, I think, but I'm not a CPA, so ask your CPA on that. That's still a huge win for you, right? So we just want to make sure that we're talking to a lender early in the process so we can go ahead and back into exactly what you feel the most confident with purchasing. Also, when talking to a lender, it's important that you just don't talk about, I want to be approved up to $300,000. It's important to go up possibly 25 or even 50,000 here or there, because you just don't know what's required now to be able to qualify when you're competing out there in the marketplace with mortgage financing, right? So we do want to talk through that as well. So 3 things, and maybe 4, a little bonus, on things that you and I can do. And again, maybe you're not purchasing a home in the near future, but you want to boost your credit score just in case, right? You know, sometimes we forget that we want to do something until we just find that perfect home. Like literally, I was searching online, I saw a picture of something in the house that I live in today. I didn't need a new home, and I went and put an offer in, and now I live there. You just never know. But if I wasn't prepared, my credit wasn't prepared, I wouldn't have been able to get that great mortgage financing at the time that came up with that opportunity, right? So things to do. Healthy balance. Again, there's people out there that say, pay everything off. Do you for you, but I'm here to talk about how to boost your credit score, right? And so some people go ahead and we go to Macy's. I haven't been to Macy's actually in like 4 years, so I'm not sure why I'm saying that, but you go to a department store and you go here, you go there, and you get all these revolving credit cards, right? Because we get discounts here and we get discounts there. So I see a lot of people sometimes with all revolving, or I see some people with all installment, right? Car, student loans, boat, tractor, just installment loans, right? You're heavy on one side or heavy on another. That's going to have your credit score lower than it could be. So it's really important to create a healthy balance between installment and revolving and installment. Healthy balance, right? And so you might say, I might say, hey, it's a great day. You get to go open a Macy's credit card, right? Now, again, you want to make sure that I'm not encouraging you to get debt, right? I'm also not encouraging you to get yourself in a credit spin, right? Out of control. It's managing all of it. So I say to my American Express that I don't want you to give me that credit card for this because I know if you give it to me, I'm gonna spend it, right? So balance it out. Follow what is smart for you. So if 300 is what your max needs to be, make it 300. If it's 500, 1,000, 2,000, do you for you. But again, don't put yourself in a situation where you're gonna let credit cause you grief and concern later, okay? Even though we have it, doesn't mean we have to use it, right? So that's important to know. Okay, so now we have a healthy balance of both, right? It's really important. Now, let's say you don't want to go out and get a revolving credit card, or you don't want to go get a Visa card to pay your gas and your groceries on, but your other half, your significant other, your husband or your wife or your mom and dad, they have a revolving credit card. You can become an authorized user. Now, again, the key to that is making sure that they're not maxed out on their credit cards, right? They're also not delinquent on their credit cards, but you can go ahead and become an authorized user and pull all that positivity over to your credit. And that will allow for, again, that healthy balance to be there to boost your credit score, okay? So that's really important. So let's say that you are somebody, and again, a lot of the people watching today are self-employed. So some of us use our credit cards on a regular basis, right? Because I want to get the points. I want Costco to pay me a lot of money for my extras, you know, things like that, whatever. So you need to figure out when that credit card reports to the bureaus, okay? Ring, ring. Hey, when do you report to the bureaus? I report to the bureaus on the 22nd. Awesome. I need to make sure that that high balance is here and what I owe is paid down to at least 30 to 50% before that credit card reports to the bureau. That is super important, okay? Because if not, you're maxed out. So a lot of people come and they're like, my credit score is so low. Why is it so low? There's no delinquencies, right, on that credit at all. It's because I'm maxed, I'm at 300 and I'm at 299. So right now there's pressure on that credit score. So your credit score is going to drop, right? 1,000 and I'm at 999, right? And your score drops. I'm at 25,000 and I'm at, you know, $25,025, right? You're maxed out on your credit card. So it's important that you and I take control and ownership in regard to that, and we know exactly when we need to pay down that credit card. So you too could do that, right? It's a little bit of a game. If you allow it to lapse and you're over it, that's the reason why your credit score is a little high. So when your borrowers call us and we're able to gain 2 points, what are we doing? We're looking at our what if simulator, which we pay for your borrowers, and we input some data. I love the algorithms and just the computer genius of it all, because it can say, hey, if I pay down this credit card by $200, I'm able to gain 3 points, 4 points, 5 points, right? And I'm able to do that in a really quick fashion. So that's another really big perk for you and I when looking at boosting our credit score. We also, okay. So let's say many of us possibly are a little older and we used to be super cool and we'll go to the sports events, and if we open up a credit card, they gave us a towel or they gave us a free ticket to the concert, I don't know, whatever. So we opened up all these credit cards, and I still have one today, I just noticed, that is super, super old. I might have the annual charge hit. For what reason, I don't know. But it is activated every year, right? So it's still there and it's super old. So if I'm gonna decide what I want to close out, I don't wanna close out that one, okay? Because it is a positive credit history that is a length of time that's gonna help boost up my credit score. If I just opened up a 20% off credit card just recently that I know for a fact I'm never going to use, right? I want to close that one out and I want to leave the super old credit card open. That's again going to help me to continue to boost my credit score, right? Let's say you are an agent that is working with a retired couple and they have organized all their debts and they're in an amazing situation that they paid everything off, but their mortgage. However, they're looking at new construction, and so they had to get temporary housing, and you had them sell their house, not so much you, but they sold their house, they went into temporary housing, and now they're looking at getting a mortgage, right? What we see is if they pay that mortgage off and they've had nothing activated, nothing is working in their favor right now, they will turn into a 720 can flip to a no score, okay? A 720 to a no score, just like that, and you don't want that to happen. So I would encourage when working with folks always just to make sure that they're using their credit. Use their credit. Now, I'm not saying you cannot get a mortgage with a no score. First-time homebuyers can do that. If you're a cosigner, you can do that. There's a lot of opportunities for no score. So I'm not saying that, but there's a lot more perks that come your way when you have a credit score. Because if you have a no score, they're going to drop you down from a pricing standpoint to the lower credit score. So maintain that credit if you are looking to purchase anything in the near future. That's really, really important to know because you want to be able to boost that score as high as you can do that. So we talked about paying down, healthy balance. And just make sure you use your credit cards on a regular basis. So if you have a card and you haven't used it, sometimes they'll come to me and I say, go buy, put some gas in your car, go buy some groceries, take the family out to dinner and put it on that credit card. And again, you can pay it off later, but we need to ignite your credit score really fast, right? So that's important to know. A couple things that are no longer on credit, and I'll wrap up with this. Back in the day, we would see judgments, we would see bankruptcies, we would see foreclosures, right? And that would droop your credit score down. We also would see medical collections. Now, we still see medical collections, right? That could possibly cause some concern. And I'm not sure if it's in the algorithm or not, but they're still there, right? However, what we are not seeing anymore is live judgments. We're not seeing sometimes bankruptcies, and we're not seeing sometimes foreclosures. So a lender can look at a credit report and then understand that that doesn't always mean that it's 100% approved until we pull something called a loan safe that shares us the whole story behind the scenes. And that's really important to know that we have to make sure there's no judgments because those will have to be paid. Bankruptcies, you still have to meet the guidelines, and foreclosures that need to meet within the guidelines of the programs that you're looking at. So that was lots of information. If you have questions, drop them below. Send some likes and loves out there. Share this with some clients. I'm just grateful to have the opportunity to feel healthy today and to be out here serving you as a mortgage lender looking to assist and help as many families with their mortgage financing needs. Always reach us here 7 days a week. My mortgage team, 456-4456. And you can go to my mortgage team at cmgfi.com. Have the best day, and we'll be back next week with Mortgage Talk with Carrie Ann.